The Royal Bank of Canada stands as one of the largest and most reputable financial institutions in Canada, with an extensive history of stability, consistent growth, and innovation. It's the largest bank by market capitalization in Canada. RBC has completed its acquisition of HSBC Canada. This $13.5 billion transaction has introduced a new chapter for approximately 780,000 clients and 4,500 employees making the transition. The move follows RBC's strategic decision to incorporate HSBC Canada operations into its network. Also, City National Bank in the United States was also acquired by RBC and is now a subsidiary of the organization. As one of Canada's Big Five banks, RBC enjoys a strong market position in Canada and maintains a substantial presence internationally. RBC has expanded beyond Canada and has operations in the United States and 30 other countries. This global footprint allows it to capitalize on opportunities in international markets and hedge against Canadian-specific economic risks. RBC operates in multiple segments, including personal, commercial banking, wealth management, insurance, investor services, and capital markets. This diversification reduces dependence on any single business line and improves the bank's resilience to sector-specific downturns. Unlike other competitors caught up in controversy in recent times, such as TD Bank being accused of money laundering and was fined $3 billion to settle charges that it failed to properly monitor money laundering by drug cartels, this fine included a $1.3 billion penalty that will be paid to the U.S. Treasury Department's Financial Crimes and Enforcement Network, a record fine for a bank. RBC has maintained a clean reputation, avoiding such detrimental penalties and brand tarnishing. AI and data analytics. The bank has been an early adopter of artificial intelligence and data analytics to enhance personalized banking, fraud detection, and risk management. RBC's AI-driven solution have led to improved customer satisfaction and operational efficiencies. RBC has been committed to a sustainable future by financing renewable energy projects, supporting clean technology, and aiming for net zero emissions by 2050. RBC has a long-standing history of delivering solid financial results, demonstrated by consistently high revenues and net income. Key performance metrics highlight RBC's stability and profitability. RBC's revenue growth is largely due to diversified revenue streams across commercial banking, wealth management, capital markets, and insurance. Their diversification mitigates risk related to market volatility and economic downturn. From pandemic lows of $82 per share to all-time highs of $174 per share, this is incredible growth. RBC is definitely a company one can bet on. I also prefer the Canadian banks over their US counterparts due to the fact banks in Canada are highly regulated and problems like Silicon Valley with bad banking practices causing financial collapses is very unlikely to happen to the Canadian banks. Also, banks in Canada are monopolistic in nature. There are only 5 main banks that have a long history. Let's take a look at RBC's income statement metrics, its annual growth year over year. In 2019, RBC reported $12 billion in net income. In 2020, the pandemic happened, so they reported $11.43 billion in net income. In 2021, $16 billion in net income. In 2022, they declined a bit at $15 billion. Let's take a look at their most recent income statement. So they've reported $53.66 billion in revenue and $33.71 billion in operating expense. So we take the revenue and subtract that by the liability, which is the operating expense, and we get a net income of $14.86 billion. RBC is known for its reliable and steady increasing of dividend payments, which makes it an attractive option for income-focused investors. With a current dividend yield ranging between 3 and 4%, and a history of dividend increases, RBC appeals to investors seeking stable income for their portfolio. So we can see here a 10-year snapshot. So in 2013, the annual dividend was $2.57, and fast forward in 2022, the annual dividend was $3.96 per share. RBC's solid financial foundation, market leadership, commitment to digital innovation, robust risk management practices, and growth potential make it an appealing long-term investment as Canada's largest bank with a strong international presence. RBC is well positioned to navigate global challenges while consistently rewarding its shareholders through dividends and capital appreciation. These qualities reinforce the case for investing into RBC as a stable, resilient, and growth orientation option in the banking sector. I want to hear your thoughts. What do you think about RBC? Do you think it's an overvalued company, or do you still see long-term growth potential? Let me know your thoughts in the comment section down below.